In this video, we discuss the potential impact of United States President Donald Trump's proposed 25% tariffs on imports from Mexico. This threat could alter the trade relationship between the two nations. Mexico is the largest trading partner of the United States, accounting for over 15% of total trade. In 2023, the United States imported more than $475 billion worth of goods from Mexico. This figure has increased by approximately 70% over the last decade. In addition, the United States exported more than $322 billion worth of goods to Mexico. This heavy mutual reliance raises questions about the implications of Trump's tariff threats. The tariffs emerged during Trump's campaign, where he pledged to protect American industry. His promises included imposing tariffs on foreign goods and even suggested tariffs exceeding 200% on vehicles imported from Mexico. Trump's intention is to establish an external revenue service. This new government body would collect tariffs and duties from foreign sources. He argues that Americans have been taxed by the Internal Revenue Service for too long. He believes it is time for foreign entities benefiting from trade to contribute their fair share. The tariffs are not solely economic, they also serve as a tool to pressure the Mexican government. Trump has demanded that President Claudia Sheinbaum's administration take stronger action against migration and fentanyl trafficking. Recently, Trump reaffirmed his plans to implement the tariffs against Mexico and Canada. In response, Sheinbaum and her administration have indicated that Mexico would retaliate with tariffs of its own on US exports. They warned that such reciprocal measures would lead to economic losses for both countries. Sheinbaum has expressed doubt that Trump will follow through on his tariff threats scheduled for February 1st. Sheinbaum has defended Mexico's efforts to manage migration and combat the fentanyl crisis in the United States. However, she has also brought into light that criminal groups in Mexico receive illegal firearms from the United States. This point puts stress on the complex nature of the issues at hand. The sectors most affected by these tariffs would be automobiles and auto parts. In 2023, these categories accounted for $129 billion of imports from Mexico. The supply chains of the three USMCA members, United States, Mexico, and Canada, are deeply interconnected. Together, Mexico and Canada supply over 50% of all auto parts imported into the United States. The introduction of new tariffs is expected to pressure the profitability of major US automakers with manufacturing plants in Mexico. Companies like General Motors could face increased production costs. This in turn may lead to higher prices for SUVs and pickup trucks for American consumers. Other categories likely to be impacted include electric machinery, motors, generators, and petroleum products. The tariffs would also affect beverages and spirits such as tequila, mezcal, and beer, which represent nearly $12 billion in trade. Moreover, the United States relies heavily on Mexican agricultural products. This includes commodities like sugar, flour, meat, and fresh produce such as avocados. The demand for avocados in particular is expected to spike ahead of the Super Bowl, which could further complicate the economic landscape. In this way, the proposed tariffs by President Trump could lead to a turbulent chapter in US-Mexico trade relations. The potential for retaliation from Mexico adds another layer of complexity. As these developments unfold, the implications for consumers and businesses in both nations will be